Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well folks, if you haven't noticed, volatility is back. We saw a 2.5% decline followed by a 2% rally, and then it faded back to close up 1% basis the S&P. We're seeing all types of volatility. This is something that I continue to expect to see unfold. Overnight, we're trading down to some key support levels that I will discuss in the technical section here in just a few minutes. But I'm not going to talk about GameStop, but I am going to discuss something that I think is important and possibly why the markets are down overnight, is the loss in confidence in the system. Yesterday's events with Robinhood and other custodians was horrific, to say the least. Now, a lot of folks are pointing blame from one side to the other, but in the end, this has been a catastrophic day for having faith in the markets. Now, the SEC and other folks have been very quiet, to be honest. All of this stuff has been laid on the broker-dealers, and they're taking the blunt of this hit. And they should in a lot of ways, since they made these decisions and the SEC didn't. Now, I'm hearing rumors that on GameStop and some of these stocks that they could put a suspension, which would be a 10-day halt of trading. That doesn't mean it's not going to trade again, but this is actually being considered, which I think would be catastrophic if we end up down that trail. But what we're seeing overnight is some weakness, and I'm expecting to see this continue. And today is the final day of January. Believe it or not, we went through the whole first month of the year, and we saw a nice rally. We made all-time new highs, and now we're seeing this thing printing down to about the middle of the range of the month. More importantly, it's possible if we close where we are trading right now that we'll close lower for the month, and that's usually not a good sign. We're likely to see some further follow-through. As I've discussed over the past several days, we're seeing massive selling coming into our database. It continues tonight. Not quite as heavy as the last few nights, but definitely a continued liquidation of the database. I'll go through all those details as well here in a few minutes. But as we look back on yesterday, we saw continuing claims come in under 5 million. I was talking about that several weeks ago. I thought we might uptick. Well, we're now officially at 4.77 million of the continuing claims. They came in a bit better than expected at 847,000, which is still not a good number by any means. I suspect as we come into next week, we'll get employment numbers and some other metrics, and those numbers are going to continue to decline. I have been discussing this for the past several weeks, is that I believe the economy is stalling here. We're going to see a continuation of the economy slowing down as we go through the next couple months at least, and maybe more. I believe Joe Biden actually signed 40 executive orders. He did more than Bush, Trump, and Obama did in their first month. So he's setting all kinds of records. And in the effect, whether there's new jobs coming to replace them or not, we're seeing a lot of jobs being shut down at the moment. So unemployment numbers and the claims and all those numbers are likely to continue to uptick and maybe even accelerate. Whether that will matter from a fundamental standpoint or not, but I still think that the backdrop of the market, and a lot of questions are being asked about the integrity of our markets, whether they're free markets, and that is setting the tone for some negative sentiment. We'll see if it follows through. We've seen this type of weakness overnight over the past several days, where we saw extreme weakness and then the market rebounds. The buy the dippers are still out there. Most likely nobody will mind if the Reddit people tell everyone to buy the S&P or buy the dip. That'll be okay. What I'm telling you is I think we're going to be at a critical level early in the session if we keep this weakness overnight, and we're likely to see this market close in a level that is going to indicate further downside follow through as we come into February. There's not really any major metrics that are coming out today, but I do see us continuing this negative rotation coming into the weekend. Also, I'll go through our database here in a minute. I'm expecting to see a fair amount of selling on the intermediate models as well as we come into tomorrow night's run, which is the big run for the week. Also, the big run that will be happening since we're at the end of the month, we'll see a lot of the secular trends, see if what they're evolving, whether we're getting buys or sells on those as well. So I'll be talking about all this on Sunday night, so stay tuned. Let's go ahead and take a look at the charts, see how they're setting up for the end of the week and the end of this month. As we begin with the review of the WaveTech database, as I mentioned in the opening comments, we are seeing a substantial amount of selling coming into the system. As we look at the output of the models overnight, we did see about 750 sell signals and about 225 buy signals, so there's a net negative rotation going on. We've moved down from 35% now to 33.43% bullish, and I expect the next number that we'll have to be watching in the database will be 28% bullish, and that's the number after that will be 22%, and so that is a full liquidation. Back on June 9th when we saw it happen, it liquidated all the way down to 8% before it found a low. I don't think that's what's in the cards, but we are seeing quite a bit of weakness. I do expect to see 28%, maybe 22% range. That's typically where we'll see some rotations start and some stabilization. As I mentioned last night's video, this database doesn't heal itself or restructure itself very quickly. It's going to take at least 4 to 5 weeks, maybe longer, and I'll be watching how it rotates as we go forward here in the next several weeks. I mentioned in the opening comments that the weekly models are currently at 81.04%. Now, if we're able to close below the key number I'll talk to you about in detail here in a few minutes, 37.35 on the SPX, that will trigger, I believe, a lot of sell signals. We could see this bullish percent drop by a substantial amount, possibly down into 72, down to the 68 number. Just like I talked to you about on the daily rotation, 68 is going to be the number to watch, and then 62, and then ultimately 42 would be a full-out liquidation mode. I don't expect us to get to those levels, but I do think we will see at least 68%, and maybe worse. We'll just have to see what type of rotation comes out of this and how the markets close. If they manage to rebound again like they did yesterday, then it's possible we'll see not as much selling. But it looks right now that they're going to want to press this thing down, close lower for the month, and potentially lower for the week as well. So we'll see how this all plays out as we go forward. As I begin the review of the S&P 500, we are seeing some overnight weakness. As we go to the daily chart, we'll see that we are trading below the 40-day moving average, 37.35. This is the number I've been talking about for several days. Last trade is 37.27. We're down 51.75 on the session, or down 1.37%. So we're seeing quite a bit of weakness. S3 is 37.01. Overnight on the futures yesterday, we saw a 37.06 print. So this looks like we're going to retest yesterday's low. Now, on the upside, because we're trading where we are, S1 37.55, and then R1 is 38.03, and my expectation we'd probably see at best case at R1 S3, but if we come in below 37.55, we're not likely to see an R1 print at all. Look for the pressure to remain throughout the session. As we go to the SPX and look at the daily charts on SPX, the same scenario is in play where the 40-day moving average is the critical number. Right now it's 37.4160. It's up slightly, so that number will be closer to 37.42. A close on the cash below 37.42 will be significant, but as we look at the weekly graph, that is going to be the real play there as we're looking at the 10-week moving average, 37.39. Like I said, based on where we're trading right now, we're going to close below that level. Now the STX number is 37.35. If we did close below that, we might signal some stability coming in the next week with an STX buy signal. We'll see how that plays out. As I said, this is the final day of the month. And as we look at the monthly chart, last month we closed at 37.56. So any close below that level will be a lower close for the month and suggests that we're likely to see further weakness as we come into February, March. Typically, we'll get weakness all the way into May if a year starts like this. We'll see how it all plays out. The PPMs are still very bullish on a longer term basis, but all this is really telling us is that the major support right now is at 33.62 or the 10-month moving average, but that's rising at about 100 handles per month. So on Monday, we'll have a new calculation somewhere around 34.60, 34.70. And that will coincide with the numbers that I've talked about before. On the downside, on a weekly basis, would be a move towards 35.70 to the 35.73 level on the SPX. So expect to see further weakness. Today's close will be everything. As long as we finish below the 37.56, this will set the tone for a negative rotation as we come into the 1st of February. Next market I'll cover is the NASDAQ. Just like with the S&P, we're going to see some key numbers challenged today. The NASDAQ has a slightly more positive view. Otherwise, the moving averages are in different positions, right? We're testing the 21-day moving average, which is currently 13,027. Last is 12,976. So we're through that number. And I'm looking for the potential to trade down to S3, so R1, S3 on the daily patterns. As we look at the weekly pattern, this is also very significant. We made a new high, and if we close on the lower end, so if we close today below an S2, which is 13,079, that's going to signify a reversal pattern. It's going to set up the challenge of the 10-week moving average, which is at 12,769. The only thing going positive for this is that the 10-week average is still at a 0.85, suggesting that there's only about a 40% probability to penetrate and stay below that level. So I'll update that as we get in early next week. But the secular charts or the monthly graph is also something that we need to pay attention to. Just like with the S&P last month, the close was 12,885. So anything close under there today would be significant. We're trading above that level right now. We would need to trade down on a monthly basis. We need to trade down toward the S1 level, which is 12,612. The low so far this month has been 12,491. So it would take a reasonably big move from here since we're already down 1.6% overnight. So this will be interesting. It's very possible that we'll get a neutral configuration out of the NASDAQ. The final market that I'll cover will be gold. Gold is actually up about 0.27 overnight. We're seeing it move toward the 10-day moving average, 1853. Last trade, 1846. I was talking about the dollar going up and gold going down. Well, we're in such a narrow range right now. We're seeing actually the dollar up slightly and gold up as well. But the configuration I expect will continue to evolve, and I'm still looking for a bottom in gold, but there's a lot of resistance overhead. As we go through the spectrum and look at the weekly graph, what we're going to see is that we're basically locked between the averages 1854 to 1888. We're going to stay below, it looks like, the 1890, 1900 level. We look at the market grid for the week. We're looking at 1880 is the R1. We fell short of that to 1871. The low 1832 is just below S1. So we basically had R1, S1 for the week. And there's not really anything going on with PPMs. We're basically negatives, telling us that there's several more weeks of work before we're going to be able to set up any kind of major pattern. We go to the secular and the monthly chart, since this is the end of the month, and we can see that the key level is that the 10-month moving average is at 1866, and it's rising at 1.07, and this has been basically the demand line. We've closed below it, closed above it, and we tend to move back above it, with especially with this type of PPM level at 1.07. Tells us that we're likely to see this market move back above that 1866 level, which goes to everything I've been telling you about gold. Somewhere around 1900, 1920 is the upside. On the downside, we're looking right at 1800, the worst case 1777. So this would complete the video for this week. Thank you so much for watching. Thank you for participating in the live streams, and I will talk to you on Sunday night.